What's going on, guys? So today, or in this video, I just wanted to go over with you on how to use the toolkits so that you can generate quotes and start writing up applications. So what I'm going to start with here is literally the start to finish process of what you need to do. So first things first, as you guys already know, hopefully, you need to put in your bookmarks in your search bar or bookmark bar, the carriers and the websites that you're going to be frequently using. So I'm just going to go over here to insurance toolkits, aka what you guys have heard me on many occasions call the marketplace. So let's clear out all these fields and get it prepped up for somebody that we're talking to today. um okay, so over here by my cursor, what you're going to see is there's going to be some FEX, term, medical supplements, DVH, and hospital indemnity. Don't really worry about these last three. You're, for the most part, going to be doing FEX and then term. If you remember from another video what FEX stands for, it's going to be permanent whole life coverages, ranging usually final expenses like by law textbook definition is $50,000 of face amount or less. And that's why you'll notice at the carriers, they have a $50,000 max coverage. Okay. So let's say we're in the quoter here or the marketplace. So you got two different options where you can start it off at. You can either do like a face amount or a target premium. So if somebody says, hey, I'm looking for a $25,000 policy, you put that in the face amount side, $25,000. Or if somebody says, I don't want to spend no more than $85 a month, you can type in 85,000. Okay, or excuse me, $85. Face amount and then premium. Coverage level, again, as you guys know, the differences between these. Level is immediate day one coverage. It's like the best of the best program that the company will offer them based off their age, their health, and their habits. Graded slash modified, it's going to vary at the insurance companies, but usually there's going to be a somewhere between a 2 to 4 year period before the benefits are 100% active. So sometimes this is tied to like a return of premium, which means, hey, if you pass away within the 2 years, you're going to get what we call a return of premium, aka all the money that you paid in to the program, plus maybe, 10%, 20% interest, depending on the specific company. Guaranteed issue, that just flat out means like, hey, pretty much like I don't care if this person has cancer, about to die tomorrow, they will give them a policy, but there's going to be a 2 year waiting period before the full death benefits kick in. But also it's going to be super jacked up in premium. Okay. And then limited pay is exactly like it sounds, limited pay. So that would be like companies that offer a 10 pay program or a 20 pay program, which means they paid a program for 10 years or 20 years respectively. They no longer send the insurance company any money every month, but they will always have that insurance on the book. So when they pass away, X amount will pay out to the family. Okay. So about the client, you're going to put in their sex, whether they're male or female. It doesn't matter what's going on in today's world. You got the male body parts or you got the female body parts. What's on your driver's license? What's on your birth certificate? Don't care about anything else. The state that you're going to select is going to be the state that that person's in. So if they're in Ohio, put Ohio. If they're in Mississippi, put Mississippi. When it comes to the birthday, there's two options. You can flat out put the date of birth or just the age. So obviously you're going to need both of them. So it don't hurt to ask, however way you're going to do it. The only one that's optional here is going to be the height and weight. Okay. So you can put in height and weight. Now, what this is going to do is this is also going to scrub it against the companies who take on their build. Sometimes people can't qualify for a level program because they're a little bit wider than they are tall, and that's okay. But the big problem or the big issue here is that sometimes you'll sell a level program to somebody without taking their build into factor, and then you can't put them into that program because, again, they're a little bit wider than they are tall. Nicotine use is going to straight up tell you what it is. So, hey, you're doing cigarettes, you're doing nicotine products, occasional pipe cigar use. Sometimes, like stogies and stuff, you don't really inhale that stuff. So I don't really hold that against people. And then other nicotine products like nicotine pouches or whatever have you. Vapes can be if there's nicotine in them, blah, blah, blah. All right. Payment type is super simple. It's most of the time you're going to talk to a lot of people who have this direct express card. There are companies who take it. I would stay away from it and put everybody or try to steer everybody towards a traditional bank draft slash EFT electronic funds transfer. That way the bill is getting paid once a month like clockwork straight out of their bank account. Nobody has to worry about calling in to give them the new numbers because it changed or anything like that you'll experience with these three forms of payments here. Now, here's what's really, really cool about the marketplace here is when you're talking to somebody who has health conditions, you can literally type in their health conditions. So let's say this person has high blood pressure. All right. Oh, birthday must be filled out first. So let's say they got high blood pressure, HBP, and all right, why didn't I type in high blood pressure? Okay, let's say it's controlled. So now it's going to pop up questions to ask this person. Date of last treatment, we'll put today's date. Date of diagnosis, we'll say they got diagnosed with it about 10 years ago. Oops, 10 years ago. And then is the prospect being prescribed medications to treat this condition? Are they compliant in regards to taking the medications as prescribed? If no medications, all right, so we're going to put yes. All right, so now it'll take it into here and put it down here. Now, let's say on the flip side, let's say they give you a medication for like whatever it is. You don't know what the condition is. So let's type in metformin, which textbook is for diabetes. But let's see here, indication, diabetes, no complications, diabetic, whatever, and then diabetic neuropathy. So nerve problems, kidney problems, or no complications. So we're gonna put no complications as of right now. Date of last use, we'll put today. Date of first fill, again, we'll go back. Instead of 10, we'll do, let's do like 5 years ago. And then we'll hit next. Has it or uncontrolled diabetes in the last 10 years? We'll put no. Has the prospect had any changes in their diabetic medication in the last year? We're going to put no, and then yes. So you can just ask them this question. Hey, what's your most recent A1C reading? You want to keep the good healthy range is like a 7.8 or somewhere under an 8%. So we're going to put yes to that. Now we'll come down here and we'll hit the good bar or the good button here, and we'll put in get quote. So now what happens is it pops up all the companies that you have a contract with or that you can submit an application with to get this person approved. So again, this person is only 45. So it looks like the Baltimore Life Companies is going to be the most competitive, $50.53. United Home Life is a number 2 at $64.23. Liberty Bankers Life is number 3 at $64.84. So literally like 50 cents between those two, but a $14 difference between the most competitive and the second. Aflac 67.57. Baltimore Companies here has another program. It's 68.85. Now, if you're wondering why there's two different programs at the same companies, you got to look at the fine print here. So this one says it's going to be standard and this one is going to be preferred. So A priority 0 to 49 standard, or I provide 45 to 69 at preferred. So they're two different programs at the same company, which is why there's a huge significant difference there. CVS, we all have it. It's under like Cigna, but that's going to be 69.56. Ascendo Preferred is going to be the name of the program. And then, of course, Great Western is coming in expensive as a motherfucker at 134.17. Now notice this one says guaranteed issue. Now, why does this say guaranteed issue? Why don't you see companies on here like Mutual Omaha or American Amicable? Is because this person that I put in here is only 45. Most insurance companies frown upon people who have some type of diabetic complication under the age of 50. You add in insulin or whatever else on top of that, then it just literally narrows the list down even further and further and further. So let's go back down here to the marketplace. So what you're going to notice here is a couple of pieces of information. Let's look at Baltimore Life first, and then we'll look at Great Western because they got the most stuff here to unload. So Baltimore Life. So this star, if there's a star next to the carrier here, that means that the company offers Social Security billing. So true Social Security billing is when somebody tells you, hey, I only get my deposit on the third Wednesday every month. So instead of looking for the Social Security calendar and then having to decipher like what's the farthest date out that Wednesday will ever be on, and then that's the payment date, all you do is put in 3W or 3S, which lets the insurance company know that every third Wednesday it's gonna be coming out, or something like that. Now let's scroll down here to Great Western. So again, compensation, this dollar sign here is letting you know for guaranteed issue, commission is cut up to 45% for clients between the ages of 40 and 80. So imagine literally right off top, just for submitting this program to this company, because this person has bad health, you're losing 50%, half of your pay right off top. That's no bueno, no good. Okay. So again, obviously this is a bigger check, but it's doing the customer a huge disservice because it's not the most competitive and it's going to be replaced every single day. Plus, it's hurting the client, it's hurting you, and sooner or later, it's going to hurt the company because all the person's going to do is get frustrated and cancel once they find out that literally they could have saved 80 bucks at another company. All right. So the I, plan info. So here again, it gives you some details. The first years, 1 and 2, is going to be a return of premium plus 10%, which stands for they're going to get $134. Let's say they pass away at month 22. So that's $2,951.74. So now we're going to multiply that by an additional 10%, which is the interest. So they're going to get an additional just under $300, $295. That's not a lot of money, man. You're telling somebody that they're covered for, what did we put in here? $25,000, and then they get a check in the mail to take care of the final expenses, and it's not even $3,300. That's a huge problem, man. Now why? Question mark. Why? There's no rates available for the level plan, so you got to quote it or run it as a guaranteed issue. So again, as we're putting in information up here, it's going to put in down here the carriers that offer the program and how to run it, like what program to actually put them in. So when you get into your Aflac portal, he's going to get approved. This person's going to get approved for 67.57 every month for 25,000, and it's going to be preferred at Baltimore Life Companies. This person's going to get approved in the A priority for standard program at $50.53. Now, here's the good thing that I like about this. For each respective carrier that you have, all you got to do is click on EAP, and it takes you to, where are my passwords? Okay. And it takes you to the portal to get you signed in so that you can start doing the EAP. All right. So how do we get to the EAP? So we're just looking here. We look for products. Oh, quote and enroll. My mind went blank there for a minute. Didn't know what was going on. All right. So now, and here's the start of your EAP. So you put in basic information and boom, that'll be another video that we go over how to do an EAP at each of the carriers that you have. Okay, but back to this. So here's how you do the marketplace. So again, the scripts lets them know that you have multiple contracts at different carriers. So what I do is I'm in person. So I show the person this. I said, hey, based off the marketplace, I can get you 25,000 for $50.53. The next competitor here is 64.63, or excuse me, 23. Now, why is this so competitive? Because we have the contracts through the state with the most competitive programs, because senior citizens, people your age, are on fixed incomes or they can't afford a super high expensive, excuse me, bill. to take care of that. So they're going to give you only the programs that are the most competitive. And then you just go into whatever you're going to say, back to the script, I should say, at whatever part you left off, and keep it moving. Okay. So super, super, super easy. Or I should say simple. Now, also, what I didn't tell you guys about is if you look at these, there's going to be companies at the bottom that are grayed out. Why are they grayed out? It'll tell you why. So Foresters did not pop up anything that can help them. Why is it excluded? If ever treated with metformin for diabetes, no complications, it's a decline. CVS, Aetna, Sendo, why was it excluded? It's not offered in Ohio. American Amicable. Why was it excluded? If metformin is for diabetes, even though there's no complication, and the first fill was prior to age 39, Family Legacy return of premium, no rate available for 25,000 at 45, at the age of 45. So to give you the reason why the programs that you're looking for, quote unquote, don't pop up, like here, Mutual of Omaha. I already knew what this one was, but this, just builds credibility with you guys. So Mutual Omaha, if metformin, why was it excluded? Why doesn't it show any programs with Mutual Omaha? If metformin for diabetes, even though there's no complications, first fill was prior to age 44, Living Promise graded could potentially be a program for this person, but there's no rate available for 25,000 at 45. So there's two things to process here. That's either telling us that 25,000 at age 45 is too high of a face amount. So maybe if we put in a lower number, it'll pop up, or it's based off the age. And I think Mutual of Omaha is one of those guys that frown upon diabetes earlier than age 50. But let's find out. So let's put in 15,000, see what pops up. Same medications, nothing's changed. All right, so nothing's changed. Oh, there's Mutual of Omaha, Living Promise graded. So what's that mean? The first 1 to 2 years ROP plus 10%. Then year 3, 36 month. Then you got 100% of the full face amount. But notice it's 53.94. Now that's what we were gonna pay for 25,000. Why would we pay that for 10, or excuse me, for 15,000? Because I remember I adjusted the premium. Why would we pay that? So now we're gonna save 20 bucks. So now if somebody's looking, quote unquote, just for brand recognition, I got the strong arm here to where I know I can take this 50, let's call it 55 bucks at this point, and put it into this company. And now instead of 15,000, I know it's going to squeeze out 25 because it showed us last screen, but I know I'm going to be able to get you more insurance. Now you got a leverage option or leverage tool that you can use to the people. It doesn't make sense. Follow my example. It doesn't make sense for people to pay $55 for 15,000 of coverage, knowing that they have $55 in their budget. Let's go ahead and get you the biggest bang for your buck, aka the 25 for the 55, even though it might not be a company that you don't recognize. Nobody cares. Insurance is going to sell itself. Nobody really cares about the company that you're either one with or trying to put them in. What they want to know is that you're on their side, working with them to get them the biggest deal or the biggest bang for their buck. Okay. So that is how you use the toolkits. Again, same process for term if you got a term program, but for the most part, depending on what you guys are going to be running, you're probably either going to be using one or the other. Okay. Super, super simple. Be sure to let me know if you got any questions regarding any of this. But the biggest piece of advice that I can give you is literally just get inside of this marketplace and just keep messing with it. You can't mess anything up, but just keep messing around with it so you get the feel of it. You get how to use it. You get super, super efficient with it. Because this is what's going to help you make the most money, one, in your career, but two, being efficient and providing value to your people, the people that you help. All right. That's that one.